All right. Hey, everybody. How's it going? This is Kyle Bazzi, president here at Benzinga and Marketfy.com. I am wicked excited for today. As most of you guys know, if you've attended one of the webinars I've moderated, today we have something very special, and this is one of the long-running Marketfy Mavens, JU, talking about optimizing the way of the trade to snatch profits daily. And The Way of the Trade is actually Jay's recent book that just got published. He'll be talking a little bit more about that. It's some really great stuff. I can't remember, but this is like Jay's third or fourth book out there. You can find it on Amazon, and it is a really cool look into what Jay does. And what Jay does is run a live trading room called the Morning Profit Maker, where he teaches his strategy each and every morning for the first 60 to 90 minutes after the open. And the community in there is fantastic. Jay is one of the premier day traders. He teaches scalping profits, and I can speak from experience because he's taught me last summer how to day trade, and he was my initial onset into this type of strategy. So without any further ado, I would like to introduce to everybody JU. How's it going, Jay?
Hey, Kyle. Hello, everybody. Thanks for attending. And can you see my screen?
Not yet, buddy. You got to go ahead and share that again. And then just let everybody know, I'll be moderating the chat. So please ask as many questions as you would like. We're in here to help you guys learn some new stuff, get some new tools in your belt to, obviously improve your trading and at the end of the day, make more money. So Jay's going to be doing the presentation. I will interrupt him with questions if there is a bunch of them. If not, we'll hold them till the end and make sure to get those answered for you guys. But Jay, we can see your screen. Everybody go ahead and open that chat and just let us know, is Jay's audio all right? Jay, can you get an audio check?
Yeah, testing. Can everybody hear me? Testing.
All right, testing. Mariana, Vernon, Bruce, Herbert, John, Michelle, Nancy, Don, Har. All right, looks like we got a ton of people coming in. Audio sounds good, Jay. I'm going to give you the floor, buddy. You hit it, and I'll see everybody in the chat if you guys need us.
Sounds good. Thanks, Kyle. Once again, thanks, everybody, for attending. Let's go ahead and get started. A little bit about me. I've been around for over 15 years. I co-founded a site called undergroundtrader.com, virtual trading desk. Basically, I've had over 10,000 traders, fund managers, investors worldwide come through the doors of undergroundtrader.com. I specialize in intraday trading, but I also do swing trading as well, because swing trading is not too far off from the intraday stuff. You utilize the same type of patterns. It's just that they're extrapolated to wider time frames. Plus, you have to have fundamental information, quantitative and qualitative information, to help you sleep at night. Okay, so these are a collection of my books. As Kyle had mentioned, my latest book, Way of the Trade, has just been released by Bloomberg and Wiley, and that is actually my fourth book that came out. I have a service on Marketfy called Morning Profit Maker, and in a nutshell, it is basically a service where you come into the chat room. I put up a watch list that I've screened and carefully selected 2 to 3 stocks. I go over the briefing at 9:15, 9:30 bell, market opens. I go grab a smoke and walk around, pace around, come back at 9:35, and that's when we kick it. And we try to get our first trade in during this wet climate. I specifically look for perfect storm setups so that we can get the maximum amount of movement in the smallest amount of time, and then we just concentrate on taking a piece of that movement every morning. So it's just a morning profit maker. I mean, that you can't come up with a better name for that. So for the year, we're up about 43, or actually we're up about 40%, and it's up over 50% since inception. I go for base hits, don't go for home runs, but when perfect storms happen, home runs can happen just as well. So as far as this book is concerned, way of the trade. What is the way of anything? Way implies the purity, the essence of whatever it is. So way of the trade, the reason why I put this book out is because with my last book, Trading Full Circle, and I consider that, my masterpiece. At least I do. And with that, the methods were introduced there, and through the years, I've realized that even though the methods, you can try to explain the methods so many times, but it's the application of those methods, and especially if the background, the landscape is changing, that throws people off. So with Way of the Trades, I've taken my methods, I've refined them, and I apply them as you would apply them daily in this new market environment. And this new market environment is what I call a thunder and tumbleweeds landscape. And I'm sure you guys have all noticed the drop in volatility pretty much after the open. It's no surprise that volumes have been dropping in the indexes in the markets steadily for the past 5 years. Now, a lot of that is going over to the dark pools, okay? But the reality is there's less participants out there. There's less retail action out there. And I'm sure every one of you, you've all heard about how the algorithm programs and the high-frequency trading programs have infested the markets. And they had their heyday in 2009 to 2011. I mean, they were pulling some crazy, crazy stuff, okay, that you don't see as much of these days, like spamming 20,000 bid and asks out there, just spoofing quotes, just crazy stuff. But now that the regulators are on top of them and there's more regulation coming, you've seen the algorithm programs also, they didn't just die down, okay? What happened was, just like with anything, competition, forgot one of the, GetGo, or one of these firms in 2010, they made like $415 million. Just a year later, okay, that profit dropped down like $14 million. I mean, so the competition came in. So now everybody wants to have an algo program. Everyone's co-locating. And so in essence, the HFTs pretty much, they got into competition with themselves and they whacked themselves out, and the regulatory agencies came in, all that stuff. But the bottom line is, with these high-frequency trading programs, what exactly do they do? And despite the notion that they provide liquidity, okay, in essence, what they do is they come in and they snatch liquidity because they have the speed advantage, they have the capital, and they have the access. They come in, they snatch that liquidity, and then they ransom it out at the highest price. All right, so that's why you get very fast action out there, especially during the market open period. And so Way of the Trade applies the methods, which I call the katana, because it's a weapon. All right, it applies the katana in these markets now, and these markets are, like I said, a thunder and tumbleweed landscape. So you can have movement, rich, vibrant, volatile movement within the first 20, 30 minutes, and then by 11:30, the volume's dried up. All right, and this is across the board. Now, you're always going to have a few stocks that are sticking out, but the magnitude of that volume, that's dried up. So it's real easy, and this is what tends to happen is people either they tend to stay out of that first 30 minutes, and decide, hey, I'm just going to wait till things slow down, kind of just pace myself and get in when everything slows down. Well, now you're going to get chopped by the HFTs, or they hit that first 30 minutes, made some money, and they find that identical pattern around 11:45, 12 o'clock, and then something happens. It doesn't move, or if it does move, and it chops them out. Then they go the other way, right? Chops them out again, and so they get stuck in this rut of just being chopped up, and then by the end of the day, they may be in such a hole, they're either desperate or they just decide I'm done for the day, and then guess what? That pattern during that dead zone period that chopped them out all the time, in the last 30 minutes of the day, it just explodes. So, and they feel even worse. Okay, but this is what a thunder and tumbleweeds landscape is, and so what we have to understand is, well, what makes up the components? What is causing this type of action out there? And the participants, I break them down into three participants. All right, you got at the top of the food chain, you got your institutions. These are the bazookas. These are the hedge funds, that have over $100 million in just discretionary capital. You have the pension funds, mutual funds, the dinosaurs. These are the ones putting in the big orders. All right. Then you have the algorithm high-frequency trading programs. These are like 50 caliber machine guns or AK-47s. These are programs that will go out and they can hit every dark pool. They can hit every exchange, okay, and have rapid fire. Right, less than a 30 millisecond advantage because they're co-located. They can come in and, I mean, you're slow motion, your broker guarantees you 1 second execution. These guys are splitting that second into 10,000 pieces. So actually more than that, milliseconds. So one-on-one, you can't beat an algorithm program or a high-frequency trading program. All right, now then you have your proprietary specialists, all right, and these guys are basically, well, they're market makers. Okay, the market makers and the specialists who have a specialist book. And their advantage, they're like snipers. Their advantage is they have order flow information. Okay, so those guys, that's your other participants. And then lastly, you have your retail. And with the retail, well, that varies tremendously. So the weapons can range anywhere from shanks, katanas, to spoons, knives, forks. So this is your basic lineup. And during the market day, I've broken it down into trading climates, and that is something that it's very hard for anyone who's not actually in the markets to understand. When you try to explain this to an investor, when trying to describe the climate, they're naturally going to look at the benchmark indexes, and they're going to say, oh, the Dow was up 70 points. Oh, you guys must have done great trading today. Okay, but the reality is that one has nothing to do with the other. One is a benchmark index, and that measures the performance of the components of the indexes, those 30 stocks, in the Dow. But as far as being able to trade them and how was the trading, and when you want to describe trading, every one of you knows, when you enter a stock, if you're getting volatility, if you're getting a fast move, momentum move, the price levels are so flexible, it's overshooting, whipsawing, there's liquidity, there's follow through, there's volume. Okay, that's a wet climate. That is the ideal climate for a trader to be in. And then you have, well, the stuff they kind of scoop under the rug, the dry climate. And this is where you get a lot of head fakes. You get a lot of stop, go, stop, stop, reverse, go, stop, these type of movements. This happens throughout the day, throughout the majority of the day. And so during those wet climates, you have the most active participants. Every one of the four food groups, or the four types of participants, they're involved. Okay, and so within that big battle royal, you don't have to bring a knife to a gunfight because these guys are too busy chopping each other up. Whereas when everything thins out, now you've got the HFTs, and they're just looking for prey. Pretty much, the institutions, the market makers, they've all slowed down their activity, and you can see that as the volume slows down. So that is a situation where what worked in the morning, okay, can get you chopped up so easily in the afternoon or the midday. So the bottom line is, what I've realized is, look, bottom line is that you want to trade, you have your best probability and your best odds placing yourself in an environment where it's wet, where you can basically see cover, behind a carcass. Okay, and as they say, my enemy's enemy is my friend. These HFTs, the beauty about them, if there is anything beautiful, is that they'll pretty much F everybody. Okay, they're trying to steal that liquidity, and they're trying to ransom it off. So if you can get in ahead of those HFTs, well, they're doing you a favor, because then what they do is they will magnify that price movement. You see what I'm saying? They'll magnify the price movement, and you are also auctioning off that liquidity at the highest possible price. So then that's what we get into with the perfect storms, because the perfect storms, and there's variations of perfect storms, but basically perfect storms take everything I just said, and it breaks it down to a few triggers, and when the trigger is hit, it's like a riptide. You just get pulled into that, and prices can move so fast. Prices can move so fast. You're literally shaking your head, wondering what just happened here. and usually to the to the good side. All right, but I'm going to go over perfect storms in a little bit. I just want to talk about something when it comes to the markets, literal versus lateral thinking. Just the whole mindset here of be careful, just taking stuff on face value out there. Okay, literal thinking means that you're straight on, and when you see the SPY selling off, okay, the first reaction is always the literal one. Oh no, the SPY's falling, and it's like when you see an iceberg, everyone sees what lays above the water. Okay, everyone sees that, and they say, "Oh my, what a big iceberg," But what they don't understand is 90% of that iceberg lurks beneath. So the literal thinker is always going to be the one who's last. They're going to be laggards. They're at the bottom of the food chain. And as a trader, you have to think ahead. All right. So for that same statement, oh, the SPY's falling. Okay, the literal thinker is going to say, well, the SPY's falling. Oh man, look at this thing. Oh, it's falling. It's falling. It's falling. Whereas a lateral thinker may be thinking, oh, all right, SPY is only 10 cents away from the daily 5-period moving average with a daily mini pup and a 60-minute mini pup. This thing can perfect storm. And so he's already plotting out where he's going to take those longs while everyone else is seeing the SPY fall. Why? Because he understands what lurks beneath. Why? Because he understands if he gets a 1-minute coil on the stochastics, that those dormant mini pups are going to trigger and form a perfect storm to the upside. Okay, so what I'm talking about is depth right here. This. What everybody sees is up here. And this applies to all facets of the market. What you hear on TV, what you read in the headlines, this stuff up here. And even with trading services, all right, look, with Morning Profit Maker, guys, this is what you guys are going to see, all right? You're going to log in the mornings and basically walk with 100, 150. That's what I shoot for, every morning. Log in, check out. Take your money, check out. Log in, check out. Log in, check out. This is the depth of all the other stuff that's going on. Okay, this is the stuff that I'm doing. This is the stuff that if you want to go beyond and understand, gee, how do you get a drop like that? How did you see that happening? If you want to be someone, well, if you want to be a more seasoned trader, okay, then Morning Profit Maker is ideal for you just as well, because you get to see stuff in real time, in action, and you get to tag along on the trades. So understand, 90% of the iceberg is above the water. 10% is above the water. 90% is underneath. Everyone watches this, but it's what's down here that pretty much screws everyone over. And understand that the markets are a minus-sum game, not a zero-sum game. It's a minus-sum game. So the majority of people out there, they cannot statistically win. The majority cannot statistically win. This is the iceberg up top, and this is what lurks below the depths. So people see the 1-minute chart, the 5-minute starting to come back down. Meanwhile, what lurks below is exactly what I said, where the daily is ready to form a mini pup, but it's lying dormant. What lurks beneath. Okay, so when the SPY sells off intraday all the way straight down, everyone's watching and they're saying, wow, man, the selling is really, really strong. But they don't realize that's the surface. But on the 60-minute and the daily time frame, you got a coil, you got a daily 5 just waiting there, and the moment it tests, all of a sudden, you get buyers that come in. Okay, the stochastics coil and the buyers come in. So this is what lurks beneath. This is what I focus on. This is what the whole essence of way of the trade is, to not worry about what everyone sees on the surface. It's to know what lurks beneath and plan ahead. And actually, this was one of the trades that we played. So the perfect storm breakout detonates on Alta while the SPY is selling off. It buy fades, and then when the SPY coils, you got your perfect storm. You got your mini pup, your pup. You got 1, 5, 60, and the daily mini pup. So that's 4 lanes, 4 time frames. There's 7 time frames total that I use. All right, we only use really five of them intraday. When you get 3 or more that form these pup and mini pup patterns, that's what I call a perfect storm. However, understand that perfect storms look great on paper. They look great on when you look at them afterwards. Hell, they look great right now, okay? But the reality is, if you're jumping in on something like this up here, you've already missed the opportunity to step in because the transparency is now showing itself. What lurked beneath is now surfacing. So the key to perfect storms and playing those is getting in early enough. You've got to spot them early enough. And in order to do that, well, I go over to the application of how you do that in way of the trade. In Morning Profit Maker, I show that every morning. These are the stages of a perfect storm. If we break it down, you have your early entry, where it starts to form. Then you get your mini pup. Then you have your impact entry on the candle break, and then you have your late entry. And you notice how when you bring it up, when I bring up Tesla, wow, that is a perfect storm. That's beautiful, Jay. You got your 1 minute mini pup, you got your 5 minute pup and mini pup. It's got a double barrel pup. You got your 15-minute mini pup. It's beautiful, and it is beautiful. Okay, but the thing is, unless you get in here, you won't be making money up here. Very likely, by the time you get the full transparency, it's already peaked out. Now, I'm just going to give you an example. This is one of our trade sequences that we played on RH on 9/11/2013, and I took a video of that. So let's go ahead and get started. So basically, RH, Restoration Hardware, okay. Let's see, play. Okay. Thank you, Microsoft. All right, so let's do this because I really want to show you guys this video. Oh, here we go. All right, so RH, Restoration Hardware, okay, it's gapped down, all right? So we're watching it, and this is right after the open. And I noticed a seller at 72.65. Now, 72.50 is a stinky 250s area. This is the SPY down below. This is RH. And in my chat room, you get the live feed of what I see on the charts. So right here, we notice that the SPY is rising here. SPY is taking a thrust, a 1 minute mini pup. But if you look at RH, you see the selling. So this is what we call a self-aid. We look at the 15-minute chart, and this is where we're talking about under the water. You notice the mini inverse pup right here, okay? So now in the chat room, I put out the alert, queue up 300 shares of short, RH, limit 72.40. So that alerts my members, hey, queue up RH, okay, limit 72.40. Now, that just means to queue up. So I always give everybody a heads up. Just be ready. And we played lighter shares because RH is a very volatile stock, very thinly traded at times. But that's why we play during earnings, during earnings or any type of gap up or gap down catalyst. Notice the cross lock, the bid and the ask, they're locked. You see that? So as the SPY tries to form a spike, RH continues to sell off to a point where now, the cross lock, they couldn't break it on the cross lock, and now RH is getting ready to test that sticky 250s area. And sticky 250s, take any number, add 250, okay, 1250, 15, 1750, 20, 2250. Take that 250 middle point and add, subtract 10 cents. So that means 72, 40, 50, 60. And those are gonna be your bumper areas. So in the chat room, go ahead and short 300 shares of RH. It's out. We're filled. Okay, we get filled 300 shares at 72.57. Now, here's the thing. 1 minute, it's taking a mini inverse pup. I've already got the 15-minute waiting already in the background, so that means I got momentum coming down, and the 5-minute is already crossing down here. So now, when the 1 minute rejects, I got all this room to the downside. Now, here's the perfect storm lead. And look how fast this thing flushes. You see that, guys? You see that flush? So into that flush, okay, is where I'm giving my people a signal to go ahead and cover into that flush. So we covered, what, 72.30 all the way down to 72. This thing will continue to dump even lower, all right? But this is all liquidity. This is all liquidity. And the key here is you got to be seasoned enough to be able to spot the signals before they become too transparent. And you can do that on your own. I welcome you to do it on your own. get the book, Way of the Trade. Or you can come and join Morning Profit Maker and pretty much see me do this every morning. And this is what I do every morning. And the thing is, I make sure that my people have liquidity, and so that's why I always give the heads up, the QXX shares for XX limit price, and then I pretty much walk them through the whole trade. But look at this. Now, if you guys follow my blog, this is what you see on my blog report, and it looks beautiful. Okay, it looks beautiful. But the thing is, ask yourself, well, at what point would I have gotten in? Okay, and that's the thing. You can always use that information to work your way backwards. But the reality is, you got to be able to see what lurks beneath, and you got to be able to plan ahead, and then simply react. All right, and that's what we do in the Morning Profit Maker. So, okay, so this is what the blog looks like. Every morning after we do our trade, I'll go ahead and post up our morning blog. Okay, and this was a lighter share trade simply because, like I said, this is a volatile stock. If that 72.65 seller, okay, didn't hold his ground, all right, well, actually, we would have jumped in and we would have added to this short closer to the 5-period moving average, where around like 73.25, 73.50. All right, so we would have averaged in there, because then that way, when the 5 rejects, then it forms a mini inverse puff, so we get the perfect storm back down anyway, but even harder, because all the buyers who got sucked in here, they get shaken right back down here. So anyway, like I said, bottom line is we went smaller so that we could add, but it collapsed anyway. So sure enough, it is what it is. Every day is a clean slate. 98 bucks in less than 5 minutes, and that's it. We hit it, we quit it, we're done. Now, I play gappers and dumpers. So these are stocks that are gapping up or they're gapping down on news. Obviously, earnings season is where you're going to get the most action. But in between the earnings season, that's like what I call a macro dry climate. But guess what? You're still going to get stocks that gap up and gap down. You're not going to get as many as during earnings season, but that can also play to a benefit, because if you only have 2 or 3 stocks that are really showing a reaction, gapping up, gapping down, well, where do you think all the focus is on? It's going to be on those stocks. So you're going to still get a wet climate, okay, in the stocks, but they can dry up rather quickly. But everything is pace. It's all about pacing. And like I said, I pretty much take care of all of that. I want to try to get people in and out of the room. We're done. In most cases, by about 10 o'clock, the average hold time is maybe about anywhere from 3 to 10 minutes. Okay. Now, there are days where it gets real choppy out there. We may be in there for an hour, okay, grinding it out. So those days are there. But the bottom line is that this is how you can learn in the room, firsthand, watching it play out, instead of, just reading it from a book or just seeing old ass charts. This is a 3 reaction sequence. Whenever you get a gap up or a gap down, you get the pop, pull back, and ramp, or you can get a drop, coil, and sell off. Okay, but the 3 reactions, the first reaction usually happens within that first 5 minutes, and then you get the second reaction by the 9:45 first 15-minute candle close, and then the third reaction usually kicks in. Now, give or take 5 or 10 minutes, depending on the overall market climate. The overall market climate is very dry. That can be extended out an extra 10, 15, 10 to 15 minutes. Sometimes as far as 30 minutes. So in dry macro climates, we want to be real careful. And so we actually either want to get in on that first reaction really quick, or wait it out and get closer towards the third reaction. The second reaction can be very choppy. And these are just more trades that we put in, took in Morning Profit Maker. And as you can see on DDD, this is a 1-minute pup breakout. Okay, and we got a 5-minute mini pup breakout, and it's just a matter of reacting. This is how you can become more seasoned, and seasoning is what it breaks down to. Now, look, I'm not going to BS you, all right? It's going to take It takes time. It takes effort. Those of you who don't have the time, don't want to put in the effort, okay, but still want to collect a C note every morning, well, I got a deal for you. All right, this is Morning Profit Maker, and that's what we do. I basically cater everything down to the lowest common denominator, all right, so that there's enough liquidity to get in and get out. But like I said, for those of you who are searching for something that's going to capture these price moves, just look at this, just dynamic price moves, all right, just dynamic price moves. And the thing is, especially in this market, when you get a move like this, okay, after the opening session, oftentimes it takes hours to be able to break that range, and you just see the market digesting and chopping for hours in a range. So it all boils down to optimizing the efficiencies of not only your trades but also your time, because time is important. And that's your morning profit. That's my Morning Profit Maker trading service. All right, it applies everything from way of the trade. Go ahead and pretty much do all the legwork so that you can follow along. You can follow along with the trades. I have the recommended sizes to make sure that people don't get hurt, and to make sure there's enough liquidity so that everyone eats. And that's what it all boils down to, eating. All right. The goal is 4-to-1 win-loss ratio, and that's, you can see that I have a 75% win rate. 50 to 150 profits every morning. That's what I look for. I talk about in my book the general and soldier segmentation that traders should need to have, where you're objective, okay, and you see the playing field, the battlefield, and you're being objective like a general. But when you're placing those trades, you're also in the eye of the storm like a soldier. And the problem is the two tend to clash. The soldier tends to go Rambo sometimes and form a coup, where the general pretty much walks off, and that's how people go on tilt and blow up and just do stupid stuff, okay? Well, Morning Profit Maker service, I take on the role of the general, and my customers or clients, they take on the role of the soldier, and soldier and general in training, if you want to kind of break it down like that. And this is what the Morning Profit Maker service looks like. You see the watch list, and then whatever positions I've taken, you see the alerts and the audio alerts, and then you see the charts play out. So this is pretty much all the information you need, all right, to be able to see stuff play out, to actually have the alerts there if you want to play them. And like I said, I pass up on a lot of setups and a lot of stocks simply because I don't think there may not be enough liquidity for the people in the room. All right, so I make sure that there's liquidity, and I try to cater to the lowest common denominator. Not to insult anybody, but they do exist. And this is the performance so far, up 40.76%. And like I said, day in, day out, I'm just hitting base hits. So this is a risk-averse strategy. Okay, since inception, we're up over 50%. Now, look at this. Don't let this scare you. Okay, 1,098 trades. What are you, nuts? Don't let this scare you. We basically look for one perfect storm trade every morning, and then you have an entry, and I like to either scale it out. All right, so instead of 2 trades, I like to scale it out into anywhere from 2 to 3 exits. So we have up to 4 trades a day on a single stock, a sequence, but that's because we're long, and then we sell, sell, sell. And, okay, so we scale it out. And to me, that's the best way to manage your risk proportionately with your reward. And, frankly, most of the times these stocks we get in, and they will explode, past where we get out. Okay, they'll drop lower than where we cover, and that's fine with me because liquidity overrides price, especially for my customers. So this is what you get. Morning Profit Maker service, watch list is included every morning at 9:15. I go over the routine, average hold time 3 to 10 minutes. This is a surface level stuff. Okay, this is surface level stuff. This is the stuff that lies beneath. All right, this is how you can uh, cultivate your seasoning as a trader, because you get to see it every morning. Every morning, you know, it's like I'm cooking breakfast every morning for everybody, and I got to get all my ingredients. Some days I got lots of fresh ingredients, you know, and some days you're gonna have to make do with, you know, hot dogs and hot dogs and toast. So either way, I'm in there every morning putting these ingredients together on the food plate, which is the watch list. And this is how this is how you make progress and evolve, should you choose to do so. All right, so bottom line here, you know, those of you who are serious and you want to learn this stuff, or, you know, you want to save some money, we have a discount coupon for the Elite Annual Membership. All right, Morning Profit Maker is $200 a month, $199 a month, $200. All right, so the Elite Annual Membership is normally $15.99, and that includes 6 phone consults with me. We're cutting that down to $950 for 7 spots only. All right, for 7 spots only for $950, and that gives you full access to Morning Profit Maker. You know, we have a video section. We have the blog, educational content, plus 6 phone call consults with me, and that's good for the first 7 spots. And in order to get that, the link's right here, and use a coupon MPMWAY. So for those of you who are interested, you know, you want to make the commitment, it's waiting for you right there. So I'll take any questions now.
All right, Jay, I got a couple here. Keep the questions coming, guys. There's a lot coming in right now. Har has a question. You know, Jay, do you trade just stocks, or do you also trade futures, forex options?
No, it's just stocks.
Okay. What is the minimum amount to start trading your strategy?
Yeah, I would say 30,000. Have a 30,000 bankroll. 25,000 you need for, you know, PDT rules, but you need to have a little buffer. So 30,000 would be what I'd say a minimum bankroll.
What do you do, Har? This comes from a couple of guys, John, Har, Jacob, and Pete. They asked, how does Jay, and I kind of formulated the responses all together. How does Jay face against, or how do you go against the electronic trading, you know, especially financed by the bigger institutions? What does that play in your strategy?
It's real simple. We don't. We don't. We play with the market. We play with the market makers. I'm sorry. We play with the algo programs. We just get in before them or right at the point of impact, and then the algos leapfrog over each other, and we just simply sell into that. Now, I didn't go too much over the perfect storm pattern, but that is the highest probability pattern, and it also gives you 3 chances to get out if the perfect storm is starting to fade, and most importantly, it allows you to reverse that and make money on the reversal. Because if something is strong and it gets muscled down and reversed, then the other side must be twice as strong, number one. Twice as strong, and then you've got everybody else who's still in trap. So you got all those guys that'll panic out. So I play them both ways, and as far as the stops are concerned, I try to take precautionary stops just to make sure we get out when the liquidity is there if we're on the wrong side. And 90% of the times when we take a stop, it's just to buy ourselves some time, get out, and let the premises test. And if that test, okay, for example, I got 2 lanes to the upside, I get the 1 minute, it's not breaking, comes back down. I'll take a stop. All right, we'll take a precautionary stop. We'll wait, and then when the futures come down, and the 1 minute comes down, and comes down hard, and all of a sudden, guess what? The 5 minute mini pup holds. Are you kidding me? As soon as that 1 minute coils, we're taking double shares. We're loading up and jumping right back in. Okay, and when that happens, because the market proved itself, when that happens, usually it'll explode right through the prior resistance, and then we're just selling right into the buyers. So we're playing with the algorithm programs, not against them.
Jay, how do you deal with market makers who set up huge slippage when price moves very quickly? And this comes from Peter W.
Yeah, well, that's the thing. You know, what you see as slippage. Okay, I see as opportunity to cover. In other words, we want to get in. You know, we want to get in right before you get that type of move. Now, if you're talking about, you know, the slippage that comes from stocks that are very expensive, like a Priceline, you know, or Chipotle's, we don't play stocks. We don't usually play stocks over $100. Usually, it's anywhere we play stocks between thirty and $70. So as far as slippage, you kind of have to define the slippage because it's either, you know, what you see, like I said, as slippage, like RH, right? That dump. That first dump looked like slippage, but, you know, doesn't matter. We were already in on it, so we take advantage of that. Now, I will say that if a stock is, the behavior of the stock is normally choppy, okay, and that might be the slippage you're talking about, where the spreads may widen by 30 cents, all right? I have to, like I said, factor in the least common denominator, the weakest people in the room, and I will adjust the shares to accommodate that. You see what I'm saying? Because I'm not going to call out something for 1,000 shares, you know, if this thing can get, you know, 30-cent spreads. That's not going to, people are going to get screwed. So I will trim that down to 300 shares or 400 shares, so that it does take care of the slippage, just like you said.
This is a great question from Kenny L. What is the short to long ratio?
I'd say about 70% of the time we're playing the long side. Yeah, 30% to the short side.
What broker do you use? Again, from Peter W.
Yeah, Cobra Trading, CobraTrading.com. That's where the rifle charts are on. That's where you'll see all the examples. I just like how smooth their indicators are. Almost every platform has some little quirks about their stochastics or moving averages. Just make sure you're getting the 24-hour feed as far as the data is concerned, including the pre and post market charting, and make sure you have the right coordinates for the stochastics.
And folks, I got a lot of questions about where you can find the product. I'm dropping the link, which will automatically apply the coupon code right inside the chat. So go ahead and find it there. There's only a few left, so make sure if you are looking to get into it, you get that link right now, okay? You know, Har, we already talked about the electronic trading, so that was that question. Har asked, can the Lynx broker also be used? LYNX. Do you know about that, Jay?
No, I never heard of Lynx. I mean, if they can do equities.
Yeah, I'm pretty sure they can, Har.
Okay, yeah. I mean, any broker that can do equities. Now, I will say that I really recommend having a point-and-click type platform, you know. But even E-Trade and Ameritrade, they all have point-and-click executions where you can see a level 2 screen. And one more other thing that is kind of important here is the commissions. If you're paying $9.99 per trade, it's going to be painful on the commissions unless you're sizing up more size. I really do recommend a broker where you're getting per share pricing. Okay, so the difference is, you know, paying $40 for a set of round trips as opposed to paying $5 or $6, and that adds up.
All right, what else do we got here? You talked about a little bit about when the stochastics converge and, you know, what you're looking for. In your room, I got a bunch of questions about like the education aspect of it, Jay. How much do you teach and what do you do every day on a day-to-day basis? Like, tell me about your blog that you do that kind of like not only just actually make money with them in the room and
Yeah.
all of the people making money in there, but how do you teach them as well?
Yeah, well, okay, as far as the mornings, I put up the watch list. I log in at 9 a.m. every morning, Eastern Time. I let everybody know, hey, this is the watch list going up at 9:15, and you know, I just basically wait until 9:15. Then I go ahead and review the watch list stocks that are up there. All right, and usually I try to screen it down, anywhere from 2 to maybe 4. Okay, but I want to have as less watch list stocks as possible, and that simply comes from screening. And after that, 9:30 rings, like I said, I try not to watch the first 5 minutes, but the whole time you have the chat room, you have this live stream of my charts going, okay? So you can watch, and whatever stock I'm watching, that's what the chart's going to show. Shortly after 9:35, that's when we pretty much get into action, and I'll point out stuff that's moving, but I'll put up the simple commands. Hey, queue up, queue up 500 shares, X BBBY short limit 77.75. Actually, that was today's trade. So I'll queue that. I'll put that out there so everyone is ready to react. All right. And now when BBBY does finally trigger, I'll go ahead and put out the alert. You'll get an audio alert, and then you see the position updated on the watch list, so you can follow along. During this time, I narrate, and this is all text. I know people have asked for audio. That may be something I consider down the road. But me, I'm just someone who, I think better typing, and you won't hear as many curse words. All right. So I'm someone who likes to type. I think better typing for some reason. So as I'm typing, I'm actually, I'm going to be pointing out exactly what I see, exactly what level is going to be a trigger, and when that trigger hits, this is a level that you're going to look to watch to consider getting out. Now you're never left on your own. So when that level hits, and we get a lean or whatever, all right, I'm going to, like I said, I'm going to put out a range that you should consider to cover the shorts. But when they hit, that's when I update the watch list. Bam, you see me cover. You get the audio alert. You get the update on the watch list. Everything plays out in real time. Okay, so this is the most purest form of education that you're going to get, because you see it play out in real time. And as far as and after we do our plays, then what I'll do is I'll go ahead and do a real quick wrap up, point out the real time charts, what happened, ask if anyone's got questions, and then, hey, have a nice day, enjoy the rest of your day, don't get chopped up, give your money back. And then about 30 minutes later, I'll post up a blog post just like this. I've done this every single day, which documents, I break down the chart, I show you where our entry was, I point out all the little nuances, everything that I saw, because that's what it boils down to. All right, I'm more seasoned, okay, and what is a seasoned trader? What does that mean? A seasoned trader is someone who can take the information, okay? Anyone sees this, I can take this, I extract as much data as I can, I extract it, and then I convert it, really. I convert it, metabolize it, and then apply and react. So basically extract and react. And so by doing this every morning, people, they get to see how I manage, and you get the osmosis effect that kicks in. And these are all trades. Every single day, I always put up the blog. All right, and I break down. Like on P, we scaled into this one. We did what's known as a defensive scale, and we scaled in as P was selling off, but it was good for one reversion pop. Okay, one reversion pop, and into that reversion pop, I'm telling everybody, dump it, sell into that liquidity, which is exactly what we did. As it popped back up through 25.09 up to 25.12, and the algos, man, they stack those bids. They stack those bids just to suck people in. We got out. Every single one of us got out right into that spike, and then they just simply collapsed it and grinded it down the rest of the day. Okay, that's what we do, and that's what I do. If you're going to make if you're going to make the commitment to log in the mornings, pay your fee. Okay, I believe that I got to make that same commitment back to you, and make sure that you're not going to get killed out there.
Are you using any limits?
Yeah. Oh yeah. I put limit prices out there. I put limit prices out there. Absolutely. In fact, whenever I put out a Q alert, that's always placed with a limit price. Now, if the limit price gets surpassed and the trade is active, I'll go ahead and say okay to take long up to this price range. All right. So I always make sure that there's people can get in. All right. If they react on that alert, that they'll be able to get in. And then the most important thing is that they'll have the liquidity to get out. And we don't leave anyone behind.
And then, yeah, so Har's asking, are you only invested for a few minutes? Yeah. Can you explain that concept?
Absolutely. Look, bottom line is it's all about efficiency. All right, the 3 to 5 minutes that we're in a stock. Okay, don't mistake it for 3 to 5 minutes. It's just a random thing. Within that 3 to 5 minutes, we're catching it right at the inflection point where the panic is going to happen. It triggers, and during that whole 10-minute cycle, that 10-minute cycle is pretty much debilitated or killed off the stock for the day. And so for the next couple hours, you're going to see the stock chop around in that range. It may never recover again. To me, understand this. When we talk about risk and reward, well, it's risk and probability. And risk is your exposure in two ways. Number one, your share position size and your allocation. Your allocation and the duration of your holding time, your holding period. The longer you hold on to a stock, okay, the more risk you take on, and therefore, then you have to use smaller shares to offset that risk, because every stock has what's known as systemic risk, and the systemic risk is because of the correlation to the markets and the overall indexes. So when most stocks have a 0.70 correlation, that means, hey, your stock can be great, but if the SPY collapses, chances are your stock's going back down too. Okay, so I don't want to put my people through that. I don't want to sit through that, and that's why I only have this service, because I realize this is where you're going to get the best odds, the best probability. Even when we're wrong, guys, even when we're wrong and we stop out, it's because we'll make money. Why? Because I believe we stop out for one or two reasons. Either the premises failed, okay, or our management's too tight, okay? Not a problem. If the premises truly did fail, then we will go the other way. Because if we're long a stock and the SPY is grinding higher and this stock is self-fading, and all of a sudden my perfect storm is now starting to wane and reverse on me, we're going to stop out. But number one, we're going to stop out. Number two, we're going to time ourselves so that when the SPY comes right back down, we're stepped in and we're shorting it right back down, because there's a lot of other folk that are still long in that stock, because they're still looking at the pretty surface, not knowing what lurks beneath. So to me, the greatest form of insider information, okay, is that type of information, the inside information. Not as inside as order flow information, but just as damn close. Because who better knows how strong a stock is than someone who's short, right? Same thing on the flip side. Who better knows how weak a stock is than someone who's long? I'm long, I'm looking at SPY breaking out, and this stock that we just went long is not. Well, I'm going to be measuring where the SPY peaks out, and as this thing starts to trigger, we're not only stopping out, but we're reversing to catch the reversal. That's what we do, and that's trading. That's extracting and reacting. And you can really only do that in a wet climate, which is the first 30, 45, 45 minutes, up to 90 minutes of the market day. Yeah.
Here's a great question. How do you find the stocks with the big move?
Real simple. I look for gappers and dumpers, stocks. You see them every morning. The top 10 lists on a broker. You can even see them on CNBC. You can see the ticker. And these are stocks that are making news. They're making headlines. And because there's a gap, okay, you're going to have some extra steam and some extra tension and interest in that stock. And that's all I ask for. All I ask for is just get us some more participants, get us some more, more prey. Get more people, more machines, more eyeballs on a stock. Any stock that has those type of eyeballs on there, all right, with the gap, and I don't even care what the news is. Okay, of course I'm not stupid either. I will read the news. Okay, but I'm thinking not. What does the news mean? I'm thinking, hey, how are the participants going to react to this news? But I don't even think that far, because it's a waste of time. My charts track everything. So I look for stocks that are gapping up or gapping down with news that have some volume that I'm familiar with. And that's it. You can eat every day. That's what we do. I mean, we eat every day, pretty much.
All right, guys, we only have time for a couple more questions, and I know we got a bunch in here. but let me try to rip through as many as I can. I got Har asking, what type of indicators are you using, such as the MACD, Bollinger Bands, etc.?
Just this, I call them rifle charts. You have your stochastics, you got your moving averages, and your Bollinger Bands. Just those three things, believe it or not. Just those three things. It's simple. Like I said, the way of the trade, the way implies the purity, the essence, but it's how you use them, and thus the whole perfect storms and all the little nuances. That's all included in my book. It looks simple, and it can be simple in the right environment, in the right context. Okay, if you don't play them in the right environment, no method's going to be good for you, especially in the dry climates. You're just going to get chopped to death. So finding the right, placing yourself in the right climate, that's almost a third of the battle right there.
And folks, I'm dropping the link to the book too. I forgot to do that, and a couple people asked me to.
Yeah, it's on Amazon.
Cool. And then does 52-week, let me see if I can read this right. 52-week stocks rise further, or 52 weeks low drop down further? Any experiences? So he's talking about like 52 weeks higher lows as resistance or support levels. Do you see anything with that, Jay, or does that play into your strategy?
You know what? Yeah, you know what? That's just it's subjective to, it's relative to every stock, any stock. I mean, look, if a stock, I can tell you if a stock hits 2750, it's going to bounce. Okay, I can tell you that, more sure of telling you 52-week stocks. The ones that hit the highs are going to go higher. It depends. It depends on the context. If the overall market's strong, if it's bouncing, yeah, you're right. It may go higher, but that's surface level stuff. And what I would do, I'd note it, but then if it's something that's gapping up, hey, thank you. Now welcome to my neighborhood, and then we're going to splice it up, analyze it, and then get ready to react and play it with the smaller time frames. It's more, it's more precision based, more precision oriented what we do.
All right, guys, that's going to do it for about the questions here. We got a bunch more, but we're kind of running out of time here. If you guys have any questions, I'm going to drop the phone number. You can reach our customer support team. There's also a live chat right on the site. Okay, so if you guys have any issues, feel free to reach out to us. The number is 877-440-9464. Okay, so please make sure to reach out to us with anything. If you guys have any more questions with the product or anything we can help you out with, somebody actually or Kenny L, we're going to be calling you in just a second. So stay by your phone, buddy. I know you're trying to get signed up for the deal. I don't think it ran out yet. That might be your issue, though, if you're not able to get in. So, right. Jay, any last words for the day, buddy?
No, just take it easy out there, everyone. It's a very treacherous, dry environment right now. Like I said, as far as the webinar, the discount coupon, it is for 7 spots. And yeah, look, it's a matter of commitment. If you guys, if those of you who are out there are ready to make a commitment, I'm ready to meet you halfway. This is what we do. This is what I do for my clients, and there's a limited opening as far as this opportunity. And it's just like everything that has to do with the markets. There's always going to be a limited window of liquidity and a limited window of opportunity. Take it or regret it. But thank you for showing up. Thank you for having me here, Kyle. Thanks, everybody. And I'll see you all in the trenches tomorrow morning, or some of you.
All right, folks, take it easy. Thanks for showing up today, and let us know if you have any more questions. Even after the webinar ends, we'll be standing by on the site, okay? Thanks a lot, everybody. Have a great day.